Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you joined us for our three-day Metals and Mining Conference. Our next presentation of the day is from AMX Exploration. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Aaron Stone, Vice President, Exploration of Amex Exploration, which trades on the OTCQX best market under the symbol AMXEF, and on the TSXV under the symbol AMX. Welcome back, Aaron.
Thank you very much, Greg. Excited to be here today, and thanks everyone for joining us, and always a pleasure to talk about the AMX exploration story. So I'll go ahead and share my screen here. I'm going to be using a verified presentation. Give me a second here. Should show up now. Perfect. So everyone should be seeing my verified presentation here. So like I said, happy to be talking about the AMX story, which our flagship project is the Perron Gold Project, located in Quebec in Canada. Obviously a very friendly mining jurisdiction, great location to be in the Abitibi Greenstone Belt. And a developing gold story here, looking to get into gold production as soon as possible. So jumping right into the presentation, our qualified persons and third-party data statements, as well as our forward-looking statements, can all be found in full on our website for further viewing. Most importantly, in just like as in real estate, same thing goes in the mining industry as well, is location, location, location. And what we have at the Perron property is nothing short of a great location to be surrounded by so many existing gold mines and advanced projects in an area such as the Abitibi, with so many towns and existing infrastructure around it. Really is an excellent location to begin a new gold mine in the coming years. So as you can see there with the red star on the in the middle of the map, we are located right in the middle of the Abitibi Greenstone Belt on the Quebec side, not too far away from the Ontario border, surrounded by existing projects. So from our latest PEA, our updated PEA that we released only a few weeks ago, this is had an updated strategy for a staged production. Phase one of which is envisaging a toll milling operation, and as you can see here, we have many existing gold mines surrounding Perron to choose from. So we have the Casa Berardi mine right to the north of us, which is 88 kilometres by road, and we also have many other options in the area that would be amenable for toll milling. We're located right in the town of Normantal, so the gold project is only about 4 to 5 kilometres outside of the town of Normantal in this direction to the northwest of the town. This was an old mining town that was built for the old Normantal mine, a VMS mine that ran from the 30s to the 70s, was mined down to a depth of 2.4 kilometres. So even though we're talking VMS versus gold, we know that these mineralising systems can have very deep roots in the area. You can see the old rehabilitated tailings facility from the Normantal mine located right next to the town here. And you can see the houses that have been built right up next to the rehabbed tailings facility. So social acceptability for mining in this area is nothing short of exceptional. The local communities are extremely supportive of the project, and the questions we get on a daily basis is when is the mine opening, and etc. We also have the electrical transformer station in the area, so not only water easily available to the project, but electricity as well. This is actually the power line that runs to the north to power the Casa Berardi mine for Hecla. The closest point off that line to where our proposed plant would go is about 6.5 kilometres. So this is why we have a very low capex in our PEA study. So this was our updated MRE, mineral resource estimate, that we put out back in May of this year. Property-wide, as you can see, we have a total of 2.3 million ounces in all categories. And importantly, we have 1.6 million ounces in the measured and indicated categories, which can obviously be translated into reserves for the future operation at a grade of a bit over 6 grams per tonne. The highlight of the property really is this, what we call the Champagne Zone in the bottom portion of the table here. So out of this 2.3 million ounces, we have almost 1 million ounces in this Champagne Zone. And you can see the grades in the bottom right-hand corner here. Importantly, we have 831,000 ounces of measured and indicated resource. That's 16.2 grams per tonne. And then another 128 at almost 10 grams per tonne. So extremely high-grade material. So really the driving force behind the Perron project is not only its location and attractive existing infrastructure in the area, but the high-grade nature of the project. And this is really what gives us so much flexibility and optionality when it comes to the future operation and the economics of it. So this was the highlights of our recently released PEA on the Perron Gold project. So like I mentioned before, a staged approach to production now. So phase 1 will consist of a 4-year, 1,000 tonne a day contractor operated toll milling operation with an initial capital cost of $146 million, which will be partially offset by gold sales in the pre-production period of $68.6 million. The financing requirement, obviously, to build the infrastructure required for that phase 1 is the $146 million. Average gold production for that phase 1 period will be 102,000 ounces a year at an AISC of $1,165 US dollars an ounce. And you can see why we are able to do this. That average diluted head grade of the Champagne Zone that will be mined during that phase 1 period is a bit over 10 grams per tonne. Year 5 will see us move into the second phase of the operation, which will consist of the remaining 13 years of the mine life. We'll then move to a 2,000 tonne a day owner-operated fleet with a on-site processing plant to be constructed on-site at Perron. The growth capital requirement for this will be 191.6 million Canadian. And the reason we call this growth capital rather than CapEx is that this 192 million will be funded from the free cash flow that will be produced during the phase 1 period. So overall, a 17.5-year mine life. So a really nice long mine life. So you should see families move to the area to complement the existing residents that we already have very close to the project. Like I said, the town of Normantal, we're located right there. There's about 800 residents there, and only about a 20-minute drive to the south of us, we have the town of Lassar also, with about 12,000 residents there. Average diluted head grade for the entire life of mine will be a bit over 5 grams a tonne at an AISC of a bit over $1,000 US an ounce. As you can see here, this is the mine plan that came out of the recently released PEA. You can see the underground stopes here. This is not the block model. This is the actual stopes that are envisaged to be mined. The legend here on the left-hand side, you can see every pink stope is a stope with a grade of 10 grams per tonne or higher. So our Champagne Zone specifically has a extreme concentration of high-grade material within it, as well as we do have some high-grade material in some of our other zones across the property as well. Importantly, the 7 small but relatively good grade open pits that will be mined out during the phase 2 portion of the operation are important in the fact that they will be backfilled with the tailings from the processing plant, which avoids the need for us to build a TMF, a tailings management facility. So not only helps us save on the CapEx, but also obviously helps out greatly from an environmental standpoint and a permitting standpoint. So this is how the envisaged operation will look on site. And if I look back in this direction, you can see our proximity to the town of Normetal. So this is the town of Normetal, only 5 to 6 kilometers away from the project. So we're far enough away from the town as to not disturb its residents, but close enough to take advantage of all of its existing infrastructure. So from our Gratien pit in the west through the Team pit in the east, this is only about a strike length of 3 kilometers. So all of this proposed infrastructure will be located extremely close to one another, which is obviously very favorable for the movement of the project. So this is the proposed, zooming into the proposed plant that will be built on site during the second phase of the operation, located right next to the proposed location of the portal. Falling underground now, you can see all of the underground stopes that are envisaged to be mined out. You can see here, this is our Champagne zone that comes down to a depth of 1.4 kilometers so far and remains open at depth. What we are trying to highlight with the yellow versus the blue here is what will be mined out during the first phase of the operation, that toll milling phase, versus the remainder of the operation is everything in blue, as well as the open pits. If I spin the model around in this direction, it just gives a really great sense of how vertical in nature the ore body is. So this ore body right here is the Champagne zone. As you can see, starts about 75 meters below surface and continues all the way down to 1.4 kilometers and remains open at depth, like I mentioned. It dips at about 88, 89 degrees to the north, so it's essentially a vertical body, which obviously helps out greatly for our mining engineering friends and our OPEX costs. Very simple ore body to mine. As you can see here, just a simple spiral decline next to the ore body, and we're just using simple longitudinal long hole stoping. Our Denise zone sits just to the south of the Champagne zone. And one of the exciting things for us is, as you can see, as we get deeper here, the Denise zone starts to converge on the Champagne zone. So a really exciting deep target that we have that hasn't been drilled yet is the convergence of those two zones at depth to see if we potentially may have some bonanza grades down at depth there. And then just falling back above underground to give a total overview of the project. So the staged approach, like I mentioned, the average stope width property wide is 4.7 meters. So really perfect widths for stopes for that longitudinal long hole stoping method. I can see the grade of the open pits there is 2.17 grams. So like I mentioned, really a healthy grade for the open pits as well, which we'll look at expanding with further drilling. The average gold production over the first 10 years of the operation will be at 112,000 ounces. As you can see here, tapers off in the back 7 years of the life of mine. Obviously, with the goal in mind of continuing to expand our known zones as well as continuing to make further discoveries as to continue to add ounces to the gold production profile at Perron. We've mainly covered the CapEx and OPEX numbers here, so I'll skip over that slide. So this was really the highlights economically of the PEA that we just released a few weeks back. So we ran the numbers at a base case of $2,500 US an ounce, and you can see some of the highlights that came out of the analysis here, with a spot price that we used at $3,400. Obviously, gold is really ripping at the moment, so I'd be really excited to see what the numbers would look like at today's price of $4,000. But in any case, at the spot price when we released the PEA at $3,400, you can see what it did to the pre-tax cash flow, moved it to over $5 billion, and what it did to the post-tax NPV and IRR. I think probably one of the most exciting numbers for me personally is that post-tax payback period, as you can see there at the spot price of $3,400, 0.4 of a year. So we're really talking only a couple of months to pay the project off, and really that comes back to the high grade nature of the ore body. So we're extremely lucky to be working with such high grade mineralization at the Perron project. So like I mentioned, 4.7 meter average stope widths, a very vertical deposit. The grade continuity is also exceptional. Like I mentioned, there's no gaps in those stopes there. It's really quite a continuous body. In terms of nugget effect, we've drilled some of the areas of the ore body, especially closer to surface. We have drill spacing of up to 7.5 meters in some areas, and the grade continuity has shown to be really exceptional. The metallurgy is also extremely strong and actually I'll come to a slide to show the metallurgy because that is obviously important. This was the metallurgy that was done on the Champagne zone specifically, and with the gravity and cyanide circuit, so skipping out the flotation circuit altogether, we had greater than 99% gold recovery. We have used 95% as an assumption in the PEA, so but it may even be better than that 95% at the end of the day. Most importantly, over 75%, so 75% or better came out via the gravity circuit, which is obviously by far and away the cheapest way to recover gold. And really that comes back to the style of mineralization that we have in the Champagne zone. You can see with these images on the right-hand side how large the gold grains are. So native free gold, not trapped within sulfides, and very easy to liberate. Hence why we had such good results via the gravity circuit. So this is our Gantt chart to show how we will be developing the Perron project and putting it into production. So we have just released our PEA update only a few weeks ago at the start of September. We've also in the last few weeks submitted our bulk sample application with the government of Quebec to the Ministries of Environment and Mining. That usually sits with the ministry between 3 to 6 months. So we do envisage to have that permit either by the end of this year or the beginning of next year. Once that permit is in place, we'll begin construction on the bulk sample, so sinking off the portal and the ramp to get down to the Champagne zone to be extracting the stope selected out of Champagne for the bulk sample. That's about 12 to 15 months of construction work, so we'd be extracting those stopes in early 2027. That bulk sample piece is extremely important in this timeline, as in the background we've already begun the feasibility study for the first phase of the operation, so that toll milling or DSO, direct shipping ore, phase 1 of the operation, which we expect that FS to be done in the first half of next year. We've also begun all the environmental and impact studies to begin all the permitting work that is required for the operation, which is usually a two-year process here in Quebec. So once that portal is sunk and the Champagne zone is opened up, that will really help us fast track our path to production, as once we receive the final permits for that phase 1 of the operation, the Champagne zone will already have been opened up, and we'll just be able to continue along the spiral decline and continue to mine the Champagne zone. In conjunction with that, then we will be doing the feasibility study for the second phase of the operation, so for the full build out of the mill on site. And we'd be envisaging 4 years of toll milling and then switching to that 2,000 tonne per day operation with the mill on site at Perron in 2032. So in conjunction with that production piece and being a near-term producer by 2028, we also will continue being very aggressive on the exploration front as well. So like I mentioned, all of our zones remain open, whether it be at depth or along strike, depending on what zone we're talking about. We also have an extremely large land package now, which you can see here. Our original Perron project was the what I'm circling in yellow here. So that's where all of our $2.3 million ounce resource is located at this point in time. In March of this year, we added what is in red, the Perron West project, to the package. So we've gone from roughly 45.5 square kilometers to almost 200 square kilometers now. And one of the things that really drew us to the project was what we're trying to illustrate here. Initial interpretations from outcrops that have been mapped and sampled on the Ontario side on the Perron West project is we're starting to see a potential mirror image of the Beaupré block, which is our rhyolitic dome that hosts our entire resource as we speak. We're starting to see a potential mirror image of that over on the Ontario side. So the same rhyolite with the same alteration signature, with the same mafic dikes cutting through it, and a lot of quartz veining. We're seeing all the geological ingredients that you want to be seeing for what we have on the Quebec side over on the Ontario side. It just hasn't been drilled yet, but it matches up very nicely with some of the existing gold showings that we have on the Perron West project on the Ontario side, along with some of the recent gold in soil anomalies that we have from the last couple of years. Just quickly as well, I'll show here, this is just a cross-section off the 3 kilometre strike length that encompasses all of our zones. So you can see here, this is our Champagne zone, which, like I said, has been economically defined down to a depth of 1.4 kilometres, but we still do have a 10-gram assay down at 1.6 kilometres. So like I mentioned, remains open at depth. So essentially every pink sphere here is a gold assay of 10 grams per tonne or higher. So we do have a lot of high grade spread out across the property, and some of our zones over in the west, such as Gratien here and Grey Cat here, we haven't done any significant deep drilling on in these areas here. So a lot of further potential in not only expanding our known zones, but continuing to make further discoveries as well. And this is just a bird's eye view that gives an idea of the spread of mineralization within that 3 kilometre strike length. So just to finish off on, before we jump into the Q&A session, our capital structure here on the left-hand side. So very, very tightly held. We envisage being able to be into production with potentially only one further financing. So potentially at the end of the day, maybe 160, 170 million shares outstanding. As you can see on the right, in the middle of the screen is our 4 analysts that cover us, and then our shareholder support on the right-hand side. So Eldorado is our largest shareholder at 17%. They originally came into the company at 9.9 at the beginning of 2024, and in our latest financing made up 64% of the latest financing to increase their position to 17%. So obviously great support from them, and as well as their technical expertise that they bring to the board as a higher grade, low cost gold producer in the Abitibi. It's obviously great to have their technical expertise on board and help us out with any suggestions with moving the project forward. So thank you very much for tuning in today. I'll stop sharing my screen and I'll go to the Q&A session here. So I can see there's a question. Are there any specific drill results or soil anomalies from recent programs that could act as near-term inflection points for shareholder value? So we've been recently conducting a surface program on our newly acquired Perron project on the Ontario side. A bit of that was on the Quebec side as well, so we've also covered those new claims on the Quebec side also, but the majority of it was on the Ontario side. So we've been covering the ground with surface prospecting, so grab sampling, outcrop mapping, structural measurements, all the rest of it, as well as a very aggressive soil sampling program to cover areas of the project that weren't already covered with soils, as well as tightening up on the soil grids in areas that did give us some really good anomalies from previous programs. So we should hopefully have the results of those over the next coming weeks and months, and that will really help guide us in next year's regional exploration drill program on the Ontario side. With insiders and major shareholders holding significant stakes, how does the company plan to enhance liquidity and attract additional institutional investment? I mean, as the geologist, I'll try to keep it pretty basic there. I'm obviously not much of a market expert, so I'll give a geologist's point of view on that. Obviously, with the current gold market, we obviously want to position the company to be a near-term producer. So that's really why you've seen a shift in our updated PEA from our first PEA to this new staged development to do that toll milling in the first phase of the operation. And that'll get us into production by 2028, rather than if we did the full build out, we probably would have been falling into the 2030s. So I think with that near-term production, that helps us get the AMX exploration story in front of a lot more larger eyeballs. At what stage do you expect strategic partnerships or M&A activity to play a role in the company's growth trajectory? Yeah, I mean, that's always an option. Always an option for AMX exploration. Obviously, like I've mentioned, Eldorado Gold are our largest shareholder at 17%. And there are obviously many other mining companies in the area. So obviously, if a offer were to come across the board, we would present that to our shareholders and always have our shareholders' interests at heart. So I think, we're gaining a lot of traction at the moment with our new staged approach to production. And so we're really keen to getting more and more excited to put this into production ourselves. But obviously, if an offer is to come across the board, that'll be put to a shareholder vote. Given the strong MPV and IIR figures at current gold prices, what are the key sensitivities in terms of price cost that investors should watch? Yeah, really good question. I think, really, like I mentioned before, what is important for us is the grade. So even at a lower, I don't think anyone envisages gold going back to $2,000 US an ounce. But you can see in the sensitivity analysis for that came in our PEA that this is a project that performs strongly in many different gold environments. So that's really what I think sets the Perron project apart from others. That this is not a large 1 gram deposit that is a massive open pit that requires a huge capex. We really have quite a modest capex to be able to put the Perron project into production. And you can see that even in a depressed gold market, we can still generate a lot of free cash flow and still be very attractive. So I think I've only got 1 minute left here, so maybe potentially time for one last question. The Champagne zone shows very high grades. Is the level of grade continuity expected across other zones? And do you anticipate additional resource expansion in the near term? Yeah, so definitely the grade continuity is by far and away the best in the Champagne zone. As you saw in that cross section before as well, we do have a lot of high grade spread out across the remainder of the property in some of our other zones as well. But definitely continuity-wise, the Champagne zone stands out. as the most attractive zone on the property, and is really the value driver for the Perron project, and what allows us to do the stage approach to production with the toll milling. We wouldn't be able to do that with 1-2 gram material. With that 10 gram plus material, it gives us a lot of flexibility on the project. But like I mentioned, we see a lot of room for growth in a lot of our other zones. So potentially deeper down, we might come across some further high grade in some of the other zones as well. We just haven't given a proper look at it yet. So I think that's potentially all the time we have time for today. So if there were any other questions, please don't hesitate to reach out to the company, and we'll be happy to answer those. But if not, thank you very much for tuning in today, and I appreciate your time.